Hi everyone. I hope you guys are doing well. So this here, what I'm gonna show you today is one of my best videos, one of my best discoveries so far since I've started this trading teachings. So I just want you to pay attention to the time, 7 a.m. Thursday, 2 January 2025. I'm gonna be showing you three different asset class, which is Forex, Bitcoin, and stocks, which is gold, Bitcoin, and Nasdaq. So at this specific time, the price is going to be trading the same 7-Eleven model at the same time, the same delivery, and the same date. So I just want you to pay attention to time and the delivery of price. So as you can see here, we have the 7 a.m. candle, which always mark out in time. We have the sell side liquidity here. Once the 7 a.m. candle is closed, we just have to mark it out in time. Then we have a displacement here. We wait for relative highs and relative lows that are gonna occur after 7 a.m. So if you can check here, there's no relative highs, but it's just a run on liquidity, which is running to the buy side. But before it got there, it created these relative highs and there's relative lows here. Then price went high to take out the buy side, the 7 a.m. high, and also to take out the buy side liquidity, which it created the what we call a total soup, which in our mentorship we explain a lot of detail that needs to be involved in trading this model because it's a very specific model. It moves the same way in each and every whatever pair you're trading. You can find this model at this specific time with the specific measurements, specific everything. So right here we have the first fair value gap, which is the 2022 model, is being traded by ICT. So this is the first entry that you're going to take. And in order for you to find the take profit, you just take your fib level, you measure this high here to this low here, because this range here is responsible for taking out the 7M high. It's also responsible of taking out the buy side liquidity. So take your fib from here to here to this low here, and we have our second standard deviation right here, and below the second standard deviation we have a first presented fair value gap, which is here, which we explain more into detail in our mentorship, how to use the Fibonacci, how to work with the second standard deviation, and what you look for after finding your second standard deviation, because they have to be a specific PD array, either a fair value gap or a new day opening gap or another block or whatever PD array you need to find after you're measuring the second standard deviation. So I just removed the Fibonacci because I did mark it in time. So this is the actual target. So from here to here, you measure this range and you can find the second standard deviation. Then this is your first entry. If you didn't take this entry here, you're just gonna wait for the first fair value gap here. Then you take your first entry. If you missed out this entry, there's what we call a new true open. True open is also part of our mentorship. It's a specific time where the market opens, and that this candle, the true open candle, is very important in your trading, because the most logic explanation of a true open is that it gives you the most reliable fair value gaps, because this fair value gap here that's above the true open is the one we use for entries. There's still more detail into it, which I cannot get through it to these videos, but I'm going to show you a lot of examples like this in the long run, and live executions like in the long run. So we have this true open here. This is another entry and the sell side delivery to the 1 minute fair value gap and the second standard deviation. So I just want you to see this delivery, see all of these the tools that I've placed here, all my analysis, and this gold analysis. And don't forget the time, 7 a.m. Thursday 02 Jan 2025. You can also check here on my cursor. This is a time right here. So we're gonna move to the next pair, which is the Bitcoin, and same time, same everything. So yeah, let's move to our next pair. All right, guys. This is our second pair, which is Bitcoin USD. So remember, same time, 7 a.m. UTC, Thursday, 2 Jan. So this is This is our 7 a.m. candle as the one that I showed on a previous gold analysis. Same time, same everything, guys. Relative equal highs, we have this high here, which are relative. You see this price when it opens at 7, it created this high and created this low. Immediately when the price moved from this high here to this low, and it moved from this low here to this high here, it makes these two levels very valid, because now we're going to have relative highs here, relative lows here, including here. So now after you've marked your relative highs and lows, price did the same thing. It took the buy side liquidity. We call this a turtle soup, which I told you before. It's for it's for our mentorship. If you want to know more about all of these details, you can just join our mentorship. You're gonna click the link in our bio. It's gonna send you through to our WhatsApp. So here we have our first delivery entry above the true open. As I told you before, you have a true open. This true open, there's a fair value gap. There must be a fair value gap above, because true open validates a very solid true fair value gap. So this is going to be our first entry trading this model, this 711 model. This is our first entry above the true open. Then take the entry here and you target what? The second standard deviation. At this point, because our measurements are very different, I cannot explain them into detail now, because this video, I don't want to make it very long. So I'm going to measure from this high here to this low here, this range. It is the range responsible for this. Oh, forgive me for the sound. But I literally live like a few blocks away from the airport, so that's the, like, I always get this sound so close. But anyway, this range here is the one responsible for buy side liquidity that's been taken out here, the 7 a.m. Relative equal highs. So we're measuring this low, this high here to this low. This is our second standard deviation, which is our measurement. Remember, after second standard deviation, what we do, we look for a fair value gap that's below the second standard deviation, which is this one, which is going to be our initial target. Let me just remove this fib here. The second standard deviation is here. We have the sell side liquidity here. Now here we have our fair value gap, which is accompanied with an order block. The data is very fast, so I don't want to scroll back to delay the video. And this is an actual model for the 2024 Ambition 711 model. Bitcoin, same time as gold, same day, same date, same everything. So this, you can just literally go to your chart and just check the time and check everything. It also go on a buy side. On this point, it goes on a buy side curve, on a buy side delivery. If we can take this low here, we can measure this low with using our fib, this low to this high, here. We can see the 50% is the one, the green, this one 50%, and we have a fair value gap below this 50%, which is an inversion fair value gap. We can say there's a claim, is there a claim fair value gap, because price went through it and above it. It's actually a balanced price range. Yeah, it's a balanced price range. I just imitated wrong here, but it's actually a balanced price range, because we have a sell side coupled the buy side, so the fair value gap now is balanced, because we have both side liquidity being covered in this here. So price retraced back to this balanced price range, and it delivered where? To our second standard deviation, exactly at the tick, because of this range here, this optimum trade entry range. You can just put it here like this. We call this an OTE. We call this an optimal trade entry. It's been derived from ICT. All of my studies I've studied from ICT, so shout out to ICT for giving us such gold mines in our heads. So yeah, if we can just remember the time, the date, it's all the same. The model, the delivery is also the same, but different pairs, different asset class is Bitcoin and is gold. So now we're gonna move to NAS 100 on stocks and see if it did deliver the same time, same delivery, same date. So let's just move to NAS 100, to NASDAQ. Yeah, so now we're on the NAS 100, which is US Cash 100. It's a NASDAQ. So same thing, same time, 7 a.m. candle. 7 Thursday 2 Jan 2015 UTC. You can still check the time here. You can still even go to your charts and check all of these guys. Like you can literally go to your charts and check these times and if this model delivers the same. So price consolidated and created displacement here, leaving this fair value gap here, and created relative highs, relative lows. After that, price went to the buy side because on the sell side you don't have a fair value gap here, so price can either go to the sell side or buy side to go for inefficiency, which is the fair value gap. And on the sell side we don't have it, but we have a fair value gap on the buy side. So this is going to be your initial entry. If you're gonna miss this entry, this is your next delivery, because if you can see here, we have this low that's been taken out. This is 2022 model, derived from ICT also. So the market structure shift, price retraced back to the fair value gap, and it delivered trading lower. So this is also like the same as I showed you on Nasdaq. Oh, sorry, the same as I showed you on gold, Bitcoin. Same concept, same time, same model, same relative equal highs and lows. But there's not even a part, guys. Like this thing is repeats the same over and over in all asset class. Is either your Euro USD, your NZD, all of these all of these classes, they have this model delivered at the same time. So finding a target, the same suspect from this high here to this low here, this low here. This is your second standard deviation. You can take your profits here and just forget everything else. It doesn't matter as long this model teaches you how to be consistent. It teaches you it's gonna give you like the most logic areas zone. It's gonna show you everything you're gonna need to find consistency in your trading. So as the price, if you can check here, this is 930. Where's 930? Here's 930 right here. So you see this model is a pre-market. It's a pre-market model. It happened. It occurs before the stock market open. You see. So this is actually it, guys. So this, as you can, as I'm measuring this fib here, this second standard deviation fib level, it's the same as what I did to gold, what I did to Bitcoin. Same delivery, same time, same day, everything is the same. So imagine if you can have this consistently in all of your asset pairs that you're trading, or you can just stick to one and do this over and over and over again. And it's not only at 7 UTC time. It happens like 4 times in a day. This model happens like 4 times in a day. But to get more information about this, you can just join our mentorship. We have a lot of tools that you need for you to find consistency in your trading. We have specific levels, specific times, which time is important in this trading industry. So if you have a specific time to trade, or the open shop time, then everything's going to be simpler for you. You're going to be able to find consistency. You're going to be able to find anything you need in the market. So thank you for watching up to this far. I hope this video just open up your eyes on everything. If you want to join our mentorship, you can still click on our WhatsApp link in our bio. So yeah, have a blessed week, have a blessed year, and see you in our next video. Cheers.